Hello and welcome to this Thursday's morning market briefing. We've got a lot to talk about, but firstly, Viktor Orbán says Hungary will approve Sweden's Nato bid, as well as that China cuts central bank reserve ratio to boost growth as sentiment sours. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, make sure to subscribe. The first article to talk about, of course, is Viktor Orbán. Now, Hungary's Prime Minister Viktor Orbán approved Sweden's bid to join NATO yesterday. This comes following Turkey, who has long been hesitating on the approval of Sweden's bid, finally approving Sweden's bid to join NATO. Now, obviously, largely when we do talk about issues relating to Hungary and NATO as a whole, we are usually talking about Ukraine or issues in relation to NATO and Russian kind of relations, and that's largely due to the fact that this is what drives certain assets on the market, such as gold, oil, and other kind of assets, which could usually be considered as safe haven assets. As often when we do see world tensions rise, we will see assets such as gold and others move to the upside. But of course, it's also important to kind of understand what's going on in regards to NATO, to understand defense industries better, and also understand the potential of other issues in the future. So this is why it's so important to kind of keep to continually come back to these issues in regards to NATO and relations with Russia and other issues around the world, as we often or most recently have probably been talking about issues within the Red Sea in the Middle East far more than we've been talking about in Ukraine and NATO. And this is despite really the Russian invasion into Ukraine continuing today. And really the reason for Sweden and Finland as well both joined and abandoned neutrality to join NATO most recently in 2022 is because of Russia's invasion into Ukraine. And that obviously had a massive impact not only on the world as a whole, but within markets on the safe haven asset of gold. And that's why we like to talk about this kind of thing and these topics, is because if we're able to see that that's what's happened, that's what happens when certain nations invade other nations, then we can expect similar should anything else happen in regards to that. And that's why understanding what's going on here with Viktor Orbán, which is often someone which is more so related or at least allied somehow with Russia, who invaded Ukraine, of course, understanding how he's dealing with the issues in regards to NATO and Sweden's membership is very, very important, as it will, hint to us what the future could be for Europe and these wars as a whole. But with the NATO Secretary General Jens Stoltenberg, I pronounced that really bad, Stoltenberg, but ultimately saying that Orbán would now urge the Hungarian parliament to ratify Sweden's entry into NATO as soon as possible. Viktor Orbán's antics in regards and relation to Sweden's accession has become an annoyance for many in NATO, with Orbán recently inviting Sweden to negotiate on the accession within Hungary. And this obviously is a large annoyance, largely because of how insignificant Hungary usually is, or should be really, within these types of negotiations and issues. Ultimately, Hungary is a very small nation in regards to some within NATO, and in regards to its kind of importance in relation to security and foreign policy as a whole for NATO. Hungary can't really be regarded as one of those front runners, leaders in the in the world kind of stage. And so with Viktor Orbán kind of messing up and disrupting these talks and accessions, ultimately we could see certain tensions rise between not only the EU but also NATO and Viktor Orbán. Now many Western diplomats see these moves by Orbán as just extra moves in an effort to kind of represent that he does have influence and significance. And often, people kind of reference the reason why he's doing this because he's got better relations with Russia and that sort of thing. And this could also certainly be the case. And so, whilst he wants to maintain the fact that he is a Western-aligned nation, he represents a Western-aligned nation. Ultimately, him kind of disrupting talks and kind of movements and alliances within NATO and the EU will enable kind of Viktor Orbán to move more and more to the good side of Putin, which he does seem to ally himself a bit more with than certain other Western leaders, of course. Now, Hungary's feet dragging follows them actually agreeing to bring in Sweden and Finland to NATO in 2022 following Russia's invasion into Ukraine. Orbán has been disrupting the alliance in other ways as well, for vetoing a €50 billion aid plan for Ukraine last month, along with blocking disbursement from an EU fund to help Ukraine. So, Orbán has basically been finding every way he can really within the alliances which Hungary is in to disrupt the process of supporting Ukraine in its fight against Russia. So that's the key thing to note. And he's continued to do this with NATO. However, most recently now he has turned over and kind of approved of this bid by Sweden. Now, Sweden's accession will now be dependent on the Hungarian Parliament ratifying Sweden's entry, with the next seating of the Hungarian National Assembly taking place in late February. However, it could be recalled earlier. The odd thing about Orbán's antics is he's never stated the reasons for delaying the ratification of Sweden's admission. Sweden has, however, been a staunch critic of the erosion of the rule of law by Orbán. So that's something to also note is, if we are seeing certain members of NATO and the EU kind of critique Orbán, we could see Orbán also kind of intervene and block them in their efforts to do things in relation to the alliance. So definitely keep your eyes on topics in regards to Orbán and NATO as a whole. It's very important to keep your eyes on this kind of stuff. Next to talk about, though, is China, which is in a very interesting position in regards to its economy. Obviously, when we've largely spoken about China, we've spoken about the certain issues within its economy, especially around its struggling property sector at the moment, which obviously underlines the entire investment sector for most individuals within China. And so the issues within that has caused some kind of worries for outside investors in regards to, business growth there and that sort of thing, as well as that certain world tensions in regards to Russia's invasion into Ukraine and issues still to do with Taiwan do weigh on many business owners in the US, which would look to invest in China as they used to. And ultimately, as a result of that, we have seen US businesses divert their investments away from China and more so towards certain nations like Vietnam, where they've kind of put their supply chains rather than the traditional route of China. And this is also added on to the fact that recently, obviously with COVID-19 and the lockdowns, China's strong no COVID policy did dramatically limit the ability for China's economy to grow, and its exports and its production did drop as a result. And from that, it's never really recovered in the same way it would have otherwise. So that's also very important to note. Now, next month, China's central bank will cut the reserve amount that banks must hold. This comes in an effort to boost growth for the slowing and hindered Chinese economy. The People's Bank of China's reserve requirement ratio will be cut by 0.5 percentage points, with the cut being expected to inject $140 billion of liquidity into the economy. But of course, these sorts of moves always do come with a great deal of risk. By cutting that reserve requirement ratio, you're obviously increasing the risk of banks having no liquidity and there being issues in relation to that. And so this could also add to certain sell side opportunities for certain hedge funds, or even weigh on investors' pessimism even more, as they then do expect a worse kind of reaction to the or a worse kind of effect if China's economy is hurt and in any way, or does it experience a recession or a bank run or that sort of thing, as they are now cutting that reserve requirement ratio. Now, recently, China's economy has soured in the perspective of investors due to issues following China's strong lockdown policy and its issues in the property sector. The governor of the central bank also provided an optimistic view on China's foreign exchange rate, saying that once the Fed started easing rates, there'd be less pressure on the yuan. Now, Governor Pan also said China's economy was recovering and its financial markets were stable, and this follows a heavy sell-off on Chinese stocks this month. But Chinese authorities are tightening limits on capital outflows to halt heavy selling. Investors are still hesitant, however, to the notion that the cut to the reserve rate will boost capital markets or not. So this is very important also to keep your eyes on. Definitely keep your eyes on anything related to China, whether that be world tensions related in regards to Taiwan, or in relation to US and Chinese business relations, or even internal issues within the Chinese economy. Definitely keep your eyes on all of that. But that's all to talk about in the articles, really. Next to talk about, of course, is the charts, where we do have quite a bit happening to note. Now, to begin with, we do have the US 30, and to talk about US indices as a whole, of course. Now, in yesterday's morning market briefing, we did talk about how US indices had kind of stalled at their kind of push to the upside, after their push to the upside, and we had seen kind of prices stall and move back on themselves and kind of retrace a bit, and we did see price come into contact with that key liquidity zone as marked out just there, but ultimately we haven't yet seen a significant move away from that, and that's what we saw in yesterday's market price action. Really, we did see price kind of although it did come into contact with that liquidity zone, we have since seen price once again return to that level and once again spike that liquidity, yet we haven't seen a significant move away from that just yet. So ultimately we could be seeing price move further to the downside, and this is in kind of in line with certain predictions that we did make in regards to that 3820 Fibonacci level not yet being touched. And so we did say that if price it hasn't come into contact with that level just yet, we could definitely expect price to still come back to that level and come into contact with that, because we knew there'd be a great deal of liquidity around that zone, and price hadn't completely neared it yet. So definitely keep your eyes on the US 30, as we do have a potential to move down a bit further to reach that 3820, and then from hitting that level or even moving away from the current level that it's at, we do have lots of upside potential. So keep your eyes on all of that and all the fundamental data which might be influencing US indices. Next to talk about though is the dollar, which is in a very interesting position because it has now come into contact with that 50% Fibonacci mark, and this follows price coming to that triple top yesterday, as we did mention how price had tried to move to the upside, but we were not seeing too much upside momentum from that level. We kind of did predict there was still some strong sell side momentum at the top of the market, and therefore the dollar was going to struggle to move to the upside. And since then we have seen price sell off and move to the downside, and has now tapped that key 50% Fibonacci level and liquidity zone, which we did note as a strong level for upside momentum. And that's because it lines up with such a strong area of liquidity, as well as having that 50% Fibonacci retracement line in there. And we have now come into contact with that, and we are seeing a bullish reaction away from there. So we could definitely see a continuation of that movement to the upside, and so we could be seeing price run all the way up to that minus 27.2% Fibonacci retracement, Fibonacci extension level. So definitely keep your eyes on that 27.2 level, as price could definitely now make its way up there. So that's a key area to definitely note. Next to talk about though is Euro USD, which is also in a very interesting position because it does mirror obviously the dollar, and price has now come into contact with that 61.80 liquidity zone that we did mark out yesterday. And that was a key level, of course, because we were mentioning how price had come into contact with that 38.20 and had moved away, but ultimately it hadn't actually come into contact with that more significant level of the 61.80, which in yesterday's price action has now completed that move to the upside and tapped that 61.80. So from here we would really be expecting a lot of sell side momentum and a move away to the downside. So we could be looking at price run all the way down to that minus 27.2% Fibonacci extension level. So definitely keep your eyes on Euro USD. Lots of opportunities to the downside now that we've come into contact with that liquidity zone. That said, we are having the ECB interest rate decision today, as well as their press conference and President Lagarde's speech following that. So much important Euro and Eurozone data coming out today. So that's going to be definitely playing into Euro USD. So definitely keep your eyes on that. Next to talk about is pound yen, which has halted and kind of stalled at that key resistance level, which price has been around for the past few days now. Nearly a whole week has price been stuck at this all-time high for pound yen. So the real question is, will pound yen ever find the momentum to actually break above and break out of that level? Or in fact, are we going to be stuck around that level, just failing to gain the momentum needed to push higher and make new highs? But we can't be sure for the moment. At the moment, we are just kind of waiting for some key, data in regards to pound yen. So maybe some Bank of England data or some Bank of Japan data, which will push pound yen to the upside or downside. So that's what's to look out for in regards to pound yen for sure. Next to talk about is Bitcoin, which has now retested this key retreat liquidity and resistance level, which we did mark out as a support zone before, after price did come into contact with it the third and final time. Since then we did break below it, and now it seems like we're coming up to retest it, and this is obviously after seeing a great deal of sell side momentum following Bitcoin ETFs being kind of approved and introduced by many market participants, and as a result we have seen a sell-off as people are using that as an opportunity to get out of their longs for Bitcoin. So we could be looking at price making its way down all the way to that $38,000 a Bitcoin mark. So definitely keep your eyes on that. Next to talk about is gold, which is an interesting position because it is now seeing a bit of a sell-off and moving to the downside. So we could definitely be seeing gold make its way all the way down to that minus 27.2% Fibonacci area. So that's something that's going to be very interesting to see, because we have now kind of broken out of this kind of consolidation area and period of ranging. So definitely look out for movements down to that minus 27.2. Very interesting to note. Next to talk about though is oil. And last to talk about on the charts is oil, where there's not too much to say really, apart from the fact that price has kind of stalled out and is still kind of ranging around these levels. But definitely keep your eyes on oil, as it is just currently sitting slightly above that $80 a barrel mark, which is very, very significant as a psychological level and has been a topic of discussion most recently for sure. Definitely keep your eyes on any issues in regards to the Red Sea, as that is also keeping oil's price high for the moment. So keep your eyes on all of that. That's all to talk about on the chart. So lastly to talk about, of course, is the economic calendar, where we do have quite a bit of very important data coming out today. So firstly, we will be getting French business confidence data, as well as that we're getting German business climate data. So, two very important business related data in regards to the Eurozone, as well as that. And most importantly, we are getting the ECB's interest rate decision and press conference. That'll be so important and will be definitely affecting the euro and other assets. But ultimately, we're expecting no change in the interest rate. So it's really the rhetoric that we're looking out for in regards to when we're going to see those first rate cuts, which is already being priced in by many market traders. So definitely keep your eyes on all of that. Next, we'll be getting Canadian earnings data, as well as US durable goods orders data, and US GDP growth rate figures, and continuing jobless claims figures for the US as well. So lots of important US data as well to definitely listen out for. And finally, we'll be getting the ECB President Lagarde's speech, so more in regards to the ECB and Eurozone to listen out for. And lastly, we're getting the Bank of Japan's monetary policy meeting minutes to listen out for. But that's all to talk about on the economic calendar. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later.